Caitlin Long with Custodia Bank. Thank you very much for joining us here in Wyoming.
Talia, welcome back to Wyoming. I know you started your TV career here, so welcome back.
Thank you so much. It's amazing to be back. It's such a full circle moment, and we're here obviously at the Wyoming Blockchain Symposium. It's taking place the same time as the Fed's annual Jackson Hole meeting. And so I'm curious for your take on the timing of this event and the Fed meeting. This year, we're actually seeing some members of the Fed participating in the Wyoming Blockchain Symposium, as well as lawmakers and regulators, including SEC Chair Paul Atkins and key industry players like yourself. So what are you expecting at this year's symposium, and how is it different this year compared to last?
Well, it's the second annual. Last year, it was, well, backing up, it was Anthony Scaramucci's idea to troll the Fed because, of course, they come every year to the Kansas City Jackson Hole symposium that happens to be here. And so Anthony came to me a couple of years ago with the request to work on this together with the University of Wyoming to troll the Fed. And it's amazing how much things have flipped. Last year, there was no one at the Fed who was allowed to attend. We found out the general counsel disinvited everyone at the Fed who was signed up to attend. This year we have two Fed governors, the most important two for our industry, Mickey Bowman, who's the vice chair for supervision, and Chris Waller, who is the head of the Fed's payments committee. Those are the two most relevant Fed governors in terms of their remits, and they're both here and they're both speaking right before the Jackson Hole Symposium. It's amazing, the turn of events.
Now, last time you spoke with CNBC was last month, and you noted you're seeing a change of stance from the Fed. In fact, we recently learned that the Fed decided to toss a practice used to supervise banks on certain crypto and fintech activities. And when you were on CNBC last month, you noted that you currently have a bank charter, but Custodia is waiting on a clearing account from the Fed. You have an application with them, and you've been waiting for more than 5 years. You also noted that there are 40 applications for Fed clearing accounts. So are you more optimistic now that Custodia Bank will finally be granted that clearing account from the Fed, especially given this change of stance from the Fed that you speak of?
Well, optimistic, yes, but nothing's happened yet, nothing's changed. The Fed is still the last mile. The other regulators, of course, you mentioned the SEC, the CFTC, and then, of course, the other bank regulators, FDIC and OCC, have backed way off their Biden-era anti-crypto policies. The Fed has backed partially off, but has not reversed all of them and has not let any of us have clearing accounts yet. So clearly there have been major personnel changes. Personnel is policy, there's no question. Things are thawing, but they're not completely melted yet at the Fed.
Now, obviously a big topic here at the Wyoming Blockchain Symposium, crypto regulation. We have seen huge milestones for crypto regulation here in the US. Just last month, the Genius Act stablecoin regulation bill was signed into law, and now there's a federal framework for stablecoins. We're seeing a lot of interest from banks trying to issue stablecoins. I know when you spoke with CNBC, you noted that Custodia Bank has a patent for bank-issued stablecoins that was approved back in 2020. You applied for it 2022. You applied for it in 2020.
Correct.
So at the time when you spoke with CNBC last month, you noted that you were gearing up to go after the patent infringers. Now that the Genius Act stablecoin regulation bill is law, are you taking action? Are you starting to move in that direction? Where does all of that stand?
Yes, there are two things we're doing. One is, yes, we are moving to defend our intellectual property, but we are also advancing our partnership with Vantage Bank. We issued the first bank-issued stablecoin back in March. We put out 3 different press releases related to transactions that we did with regulators' approval. We don't act unless the regulators have approved. It is a little different than the rest of the industry that was asking for forgiveness, not permission. We ask for permission, not forgiveness. So things are moving more slowly, clearly, in the banking industry because we have to wait for permission. It's just our policy. And I think in the end, that will have paid off for us because we are, with Vantage, working very closely with the federal regulators. And stay tuned because we're pretty close to making some announcements about bringing this technology to the banks for tokenized bank deposits together with Vantage Bank. We have a lot of banks interested in joining us, and we'll have a lot more to say about this soon, but what we're bringing is a license to use that patent for the banks that join us.
And I look forward to hearing that announcement once you're able to disclose. But what has changed for the industry since the Genius Act became law, just generally speaking?
Well, we're all trying to figure out what it means. The bank regulators have to put out rules, and that's going to take at least 6 months optimistically, probably longer. And so we're waiting to see some really major decisions. Can banks issue tokenized bank deposits? If banks own stable coins, what is the capital charge that the banks have for owning the stable coins? Those questions have not been answered yet. And there's another major one, which is the compliance piece. So much of the non-bank activity, with the fintech specifically in the crypto industry, is not up to bank standards of compliance. And I don't believe that the bank regulators will have a two-tier system where the banks will have stronger compliance requirements than the non-banks. That puts the banks at a competitive disadvantage. But right now, that's exactly what the system is. And so I believe that the Fed and the OCC and the FDIC will clarify that there is a level playing field. But there's a big open question. If someone volleys a tokenized bank deposit from bank A to bank B, does that bank B customer have to have been onboarded at bank A? And right now, that is an ambiguity that the bank regulators have not answered yet within the fintech space, because the compliance requirements are not as strong. That just hasn't been an issue. But like I predicted, we will see a leveling of those compliance requirements. And frankly, that will be wonderful news for the community banks, because they've been just absolutely buried by compliance costs. Small banks, it's crazy in a small town. You spent time in Wyoming, you know everybody knows each other.
Absolutely.
And so to make a small community bank have to get their neighbor's driver's license in order to be able to open an account or send a wire seems a little crazy, seems a little excessive, and it is for community banks. And so I think what will happen is there will be an ability for banks to share that information with each other. That currently does not happen, but I do believe that that is on the bank regulators' radar screen, and it will be a positive for everybody. There will be a lot less friction in using the banking system and using fintechs when that is all clarified.
And it will be very interesting to see if that does in fact happen. Right now, obviously all eyes are on the Clarity Act, which essentially lays out the rules of the road for crypto. And the House passed the Clarity Act last month. Now it moves on to the Senate. What do you think happens there? Do you think that it will in fact pass the Senate in its current form? And if it does, what will change for the industry? Will anything change for Custodia Bank?
Well, for Custodia, no, because we're focused on stablecoins. So for us, the Genius Act was the most important one. For those that like, for example, Kraken, a sponsor of this event, more focused on the exchange aspect, not on stablecoins, the Clarity Act matters more to them. But I do believe it will pass. It won't be the House version. There is the Senate is doing a rewrite. It'll be interesting to see what ends up happening. Will it be the Senate version or the House version that ultimately gets signed into law? But President Trump has indicated that he wants the Clarity Act signed into law before the end of the year. And his son, Eric Trump, is coming to this event, one of the speakers at this event. So I do expect that Clarity will pass. I just don't know exactly yet what it will look like.
Absolutely. Now, you obviously have a TradFi background, a very impressive background on Wall Street. You had big roles for Morgan Stanley and Credit Suisse, just to name a few. And then you shifted your focus to crypto, creating and founding Custodia Bank back in 2020. So I'm curious for your take on this moment for institutions. How is this moment different compared to the past? And what does it signal for markets and the industry at large?
Well, this cycle, Bitcoin tends to go in 4-year cycles, and that tends to lead the entire industry. And this particular cycle has been dominated by institutions. Prior cycles, it was all retail. We were all bootstrapping the network. We were all trying to create more decentralization, bring more nodes online, for example, with Bitcoin. And same thing with Ethereum back when it was proof of work. Everybody was trying to just bring more adoption and more participation, more security by bringing in additional nodes to the networks. Now it's about the big Wall Street titans coming in, and finance has come in a big way with these Bitcoin treasury companies and creating derivatives and wrappers around Bitcoin. So big finance is here in a big way, and that seems to be driving this cycle. I suspect it will continue to drive this cycle. What I don't know, and I do worry, is how those titans of finance will react when the bear market inevitably comes again. I know there are some who are optimistic and think it won't come again. I've been around since 2012, so I know it's coming again. And I do worry that the risk management models that the big Wall Street firms use do not lend themselves to an asset of finite supply like Bitcoin. And I have been concerned for years that when the big players come, as they, I believe, inevitably would, now they are here, they might get themselves tied in knots because their risk models don't allow them to, they're perfectly comfortable taking more leverage than you would take with an asset of finite supply, because they have all these mechanisms to bail them out in the event that supply for an asset becomes too tight. They have discount window, they have fault tolerances built into the securities system so that if the books don't balance, it's okay. They can always go the next day and get the shares from the market the next day. Those kinds of fault tolerances are built into the system because of legacy reasons where IT systems were not updating in real time. In crypto, everything has to be real time. And so it's just a different animal, and I do worry that the risk managers of TradFi firms, they've never seen anything like Bitcoin before, and this will present new challenges that they haven't thought of yet.
Interesting perspective. Now I want to shift gears, if you don't mind,
Sure.
to focus on Wyoming, because we are here for the Wyoming Blockchain Symposium, and this is where you're based.
Right.
So I'm curious for your take on Wyoming as a crypto hub. How would you rate Wyoming as a crypto hub? And, you know, obviously Wyoming is known to be a pioneer as it relates to crypto regulation, enacting more than 50 crypto-specific laws.
Yes.
What else is Wyoming known for in the crypto space? And how would you rate Wyoming as a crypto hub compared to other states?
Well, it's in my view, number one. And it's an unusual combination because mostly in TradFi, New York, and to a lesser extent, California, are the top states. But in crypto, it has been Wyoming because we got here first. And some of that was I tried to donate appreciated Bitcoin to my undergraduate alma mater in 2017 to fund an endowment for female engineers, and they couldn't accept my Bitcoin because the state had a bad money transmitter law. And I grew up here, even though I was in New York for 30 years, and volunteered to come back home to change that law. And one legislator, Tyler Lindholm, grabbed onto me and said, let's do more. What else can we do? What else can we do? And so we did 5 laws that first year, and then 8 more the next year. And now there have been 8 legislative sessions, and each legislative session there have been at least 4 or 5 bills. So we're up to more than 50 now for this industry that have been enacted since the whole thing started in 2017. It's bipartisan. It's shifted from the original legislators that sponsored it to a whole new group of legislators and then another one. So there's a real commitment in this state. What makes this state so interesting is, in part, there's no state income tax here. Right. It's very committed to privacy. So that one of the laws that was passed is a law that creates a safe harbor for software developers. So if Roman Storm, for example, had been in Wyoming, then he wouldn't have been prosecuted for merely writing code. There's a law that says a software developer who writes code, that is protected speech in Wyoming. Now that doesn't preempt federal law, it's a state law, but that's not nothing either. And so software developers have been attracted to Wyoming because they get the extra protection of knowing they won't be criminally prosecuted if someone else uses code they wrote for nefarious reasons. And then the other piece is Wyoming invented the LLC form of business entity. It built on Delaware's lead in corporate registrations, and in about 40 years ago, it was the one that created the LLC, the limited liability company, which is a simpler version of a Delaware corporation. And Wyoming is number 2 in the state. This isn't well known. No, it's number 2 in the nation for business entity registrations because of its LLC leadership. And that I mean, probably most of your viewers, if you formed a business, you probably formed an LLC, not a corporation. And many of your viewers who did so would have done so in Wyoming, in part for the tax reason. So we are a real leader in that regard. And I'll throw in one fun little fact as well. Wyoming led the nation in something else, which was it was the first state to give women the right to vote. That's why it's called the Equality State. And that happened 50 years before the amendment to the US Constitution was made to give women the right to vote. So this state has not been afraid to take on somewhat controversial issues of their day and lead. And we did it with crypto again. And you will see at this conference, Governor Gordon is here, and they have announced that Wyoming is itself launching at this conference the first state-issued stablecoin.
Now, you mentioned Kraken earlier.
Yes.
The crypto exchange decided to relocate its headquarters to Wyoming. So what does that signal to you? Does that further validate Wyoming as a crypto hub?
Yes, absolutely. And if you go back on my Twitter account, you'll see pictures where I was trying to recruit back before I started Custodia back in 2017, 2018. And the next couple of years, trying to recruit companies to come here. And Jesse Powell was one of the first, the founder and then CEO of Kraken, was one of the first to show up. And so it is a nice evolution that they had put a business here probably in 2019, and then they applied for one of the same bank charters that Custodia has in 2020. They, like Custodia, it's been more than 5 years since they applied for their FedMaster account, so they're still waiting. We were denied and sued, and we actually sued before we got denied, so the sequencing is a little bit different, but we both applied for our clearing account at the Fed at the same time. So long story short, Kraken's been here for a while, and to see them formally move the corporate headquarters is just the next evolution on a long journey, since they've been here really for 8 years already.
Now, according to the 2025 U.S. Tech Salaries report by Design Rush, Wyoming saw a more than 6.5% drop in inflation-adjusted tech wages over the last decade. That was the steepest drop of any state in the country.
Interesting.
So what does that signal to you? And do you think that could potentially deter tech talent, crypto talent, from wanting to come to this state to work?
Well, we didn't have much of a tech industry, but here's what was there before crypto: data centers. Wyoming is on the backbone of the internet. It runs, the fiber runs along the interstate highways in the United States, and there's really the major east-west highway in the United States is I-80, which you would know well, and that runs between New York and San Francisco, goes straight through Wyoming. And so Cheyenne in particular, because it's at the intersection of two interstates, has very low latency. And Microsoft has 3 data centers there, Meta has 1, there are more coming, because power is relatively cheap and it's got low latency. And so most of the tech industry that was here was in the data center field. What's happened is so much automation has happened in that space. But what's also fun is because that infrastructure is here, the Bitcoin miners have come in as well. So I view what's happening in crypto as being independent really of what's happening in the data center space. But as you know, and you've reported, that Bitcoin mining and AI, with all the insatiable power demand and data center need, is converging, and Wyoming is absolutely going to be right at the intersection of that, because we produce so much more power than we consume in the state of Wyoming. We would love to have uses for that power inside the state, and the data center industry is, of course, where that's going to be. And because of that infrastructure being in Cheyenne, just look for continued growth, just massive growth. Each time Microsoft has announced their commitments to data centers in Wyoming, it's been more billions each time, and they're just now building their 3rd data center there. It's incredible. So Cheyenne is so different than when you were working here because of all these giant data centers that are here, and we love that.
Caitlin Long, CEO, founder of Custodia Bank, thank you for that insightful conversation. It was such a pleasure speaking with you in your home state of Wyoming.
Such a pleasure to have you here, have you back home.
Thank you so much.